Welcome to Bulls, Bears, and Bill, a weekly Dalton community television program on the financial markets. Brought to you by Bill Schmick, founder of Onota Partners, and me, Rachel Branch, co-host. And when Bill says financial markets, he means all of them. On each program, we will continue to share with you, our audience, why the markets did what they did and where they are going in the weeks and months ahead. Bill writes 2 columns weekly for several media and newspaper organizations throughout the country. The substance of Bulls, Bears, and Bill. Hello.
Thank you, Rachel. How are you?
I'm good. How are
Good.
you?
A little warm. This is the end of July. The markets are slow, but certainly the news is not slow at all. And we've got a lot of things that are going on. It's Monday afternoon, and I guess when I wrote my column and readers read it, which would have been over the weekend, we had a Japanese trade deal. But since then, the president announced yet another deal, and this time with the European Union. And that happened on Sunday.
Well, let's start. First, will you please tell our audience about the Japanese trade deal? That seems important, is it?
It's very important. Japan is one of our leading trade partners. Now, as is the European Union. But Mexico and Canada, which we haven't heard very much about in the last couple of months, are leading trading partners. And following that are the European Union and Japan. What I gather from the 2 agreements that we've had in the last several days is that these are frameworks for agreements. They're not the agreement itself, meaning as it stands now, we've agreed to agree. In the weeks and months ahead, I suspect that there will be some give and take between the 2 parties before we have any kind of tariff agreement that can be inked into a legal document. So, for example, what I wrote about this week was that the president, who likes to embellish things, basically said that the Japanese had agreed to invest well over $500 billion in the United States, and that investment, whatever profits are made, the United States would take 90% of them, and I guess the Japanese 10%. That is somewhat erroneous. I think what the Japanese, from their point of view, wanted to do was to loan money, sort of a banker, loan money to the United States and loan money to those companies in the United States, American companies, that might want to invest in American infrastructure. Now, where they make their money, like any banker would be charging an interest rate on the money they loan to American corporations. And I think that's where they're coming from. And that's a pretty good deal for the Japanese. And by the way, this isn't anything new. When I look at what has happened in the past decades, China, as a great example, has gone around and loaned trillions of dollars to emerging market economies to do the very same thing. And in exchange, they received an interest rate payment each year, each month, whatever, as a banker to emerging markets. The only difference in this kind of deal is that we are the emerging market. Now,
That leads right into our second question.
okay.
This week, the Treasury Secretary, Scott Bessent, is meeting with his Chinese counterparts. Can we expect another trade deal, Bill?
Yes, but not right away is my thought. I think the chances are quite high that what we will come out of this 2-day meeting in Stockholm with the Chinese is an extension of the trade deadline which is, I think, on August the 12th, I think was the deadline. That will be extended for another 2 or 3 months. No agreement as such will occur. And I don't know if we'll ever get a grand agreement with the Chinese because their economies, it's not a market economy. And that's different than a European Union or Japanese agreement, which is based on market economies. Meaning, as we all know, the Chinese is a central government-run economy, and as such, even though our president might think that President Xi has omnipotent powers, he's limited as well. I mean, their economy is suffering. They're in this deflationary environment. The tariffs that have been put on their economy has hurt them. Their unemployment rate among youth is sky high. And honestly, they have been working overtime to create enough exports to kind of hold their economy up. And where are these exports going? They're going to the 87% of the world that is not the United States. And exports to all countries outside of the United States have skyrocketed. So I think there's a lot that has to be discussed. I've been reading in the paper that the president was going to talk to them about energy and about their import of energy from both Iran and Russia. What the idea behind that is that the United States, I assume, would like to see those imports of Russian and Iranian oil, which are supposedly embargoed, reduced by the Chinese, and their purchase of energy from us to increase. Now, if that were a market economy, if we didn't have a war going on in Ukraine or in Iran, as we know, with Israel and our help, this goes beyond economics into politics. And so I think it's a thorny issue and something that the Chinese are not going to be happy that we're bringing up. Nonetheless, I see good terms. We've made progress. We're going to extend the tariff issues deadline further out, yada, yada, yada. But I don't think there'll be anything like the EU or the Japanese agreement. Now, back to the most recent one, the European Union. Once again, the announcement was that the EU will be investing, I think, 600 billion over time into the United States. There were no details. Now, does that 600 billion mean specifically European companies or the government investing in something in the United States? Or will the function be more like what the Japanese understand to be, that the European Union will act as a banker to the U.S. emerging market? I'm not sure, and there are no details. They did promise 750 billion of energy purchases from the United States. Now, I would question that simply because 750 billion over 3 years, which is what they're talking about, it's like $250 billion in purchases of energy per year. That's practically all the purchases of energy within the EU. And I don't know if when push comes to shove, that's what's really going to happen. Whether Europe is going to turn from their energy sources today into basically buying U.S. only energy. So again, I'm taking a grain of salt with the idea that on the surface, these announcements will end up being what actually does occur. But people really like the idea that we are making headway with this whole tariff issue.
Well, Then I've got to ask you, with August 1 approaching at the end of this week, and there still appears to be no agreement on the horizon with the European Union on tariffs, will we see another Trump again chickens out taco, or will tariffs emerge?
Well, I just finished saying that is what I said on Friday.
Yeah.
But on Sunday now, we have the answer that we have an agreement with the European Union. With the rest of the countries on August 1st, there's still, the administration is still adamant that if August 1st comes and no one else makes an agreement, then yes, there will be reciprocal tariffs, and they'll be much higher than the 15% tariff that will be levied on the EU and in Japan. When I think about that, which I guess on the surface we could say the U.S. is winning in the tariff war, but when I think about it, from an American's point of view, what's happened is that we have agreed, in the case of the EU, that all their goods and services that come into this country will be taxed an additional 15%. And the same applies to the things that come in from Japan. When you add those two together, that's a great deal of our imports. And what does this mean to America? Well, from my point of view, both corporations and individuals like us, somebody has to pay for the tariffs. Now, the fiction is that, well, the exporters, the countries that are exporting those products to us, will pay the tariffs. But I doubt that. I don't see any evidence of that occurring. What I do see occurring is that the tariffs on these imports are being paid for by American corporations. General Motors just last week announced in their quarterly earnings that they took $1 billion hit simply on the tariffs, and they think that by the end of the year, that number could go up to $4 to $5 billion. Now, how long can a GM continue to sustain those kinds of losses without passing them on to we, the consumers, in the form of higher prices in autos? Is questioned. But right now, it's murky. But what I will tell you, that if we do have 15 to 20% tariffs as a rule of thumb from here on, one of two things are going to happen. That for the stock market, we're going to see large hits in the earnings and profits of our American corporations, especially those corporations that import goods and services. Now, the only alternative to that is to pass on those prices or some of those prices to we, the consumers, which would mean that if you're going to buy an automobile sometime in the next year or so, you would expect to pay considerably more for that automobile. If you, for example, like brie cheese, you should expect to see the price of brie cheese, at least brie cheese coming from France, to go up in price over the course of the next 6 months. Or wine, or brandy, or whatever else that we import from Europe or from Japan.
Aren't we already seeing in the auto manufacturers losses in the first quarter, profit and losses?
Yes.
Isn't that already happening?
It's happening, and we can continue to see them. And it's just a question of how long can our American corporations continue to absorb these tariff costs before they no longer can do that and have to pass them on to you and I. Now, and the funniest thing is that the administration itself are coming out, I think, on a weekly basis, touting the fact that we have just made $100 billion on tariffs, okay, which is reducing the deficit. It's true. That's what's happening. And that should continue as the tariffs take effect. But make no mistakes, those are taxes on Americans. So when I look at the EU or I look at Japan, what do I see? I see that we will be paying 15% or more for the things they import to us, but the things that we export to Japan and the EU, there are no tariffs on them. So who benefits from that? Well, their corporations benefit from it because they're paying less. There's no tariffs on what they're importing from us. And European consumers and Japanese consumers, once again, they're paying less as well because there going to be no tariffs on our imports to them. Now, theoretically, what that means, therefore, is that the more we export to Japan or export to the European Union at a cheaper price, that means that those consumers, those corporations will buy more and more American products. And I believe that that will happen. So there is benefit, no question about it, in the sense that our goods will from now on, or at least as long as the agreements last, our goods will not be taxed by tariffs coming into those countries.
Wow. Here we are again. Could the Federal Reserve surprise us this week with an interest rate cut? And if it does, what are the all-around ramifications? And one question I want to add to that, which you don't know about, Bill, is what about the other 6 members of the Federal Reserve Board and where they stand and how they affect this attempt to get, for Trump to get Chairman Powell out?
Well, I think, no. Number one, I do not think they're going to cut interest rates this week. There's a possibility that they cut them in September. Number two, the voting members of the Federal Open Market Committee, only 2 have been adamant about cutting rates. And both of those members are basically auditioning for Fed Chair Powell's job next year. But I don't think either one of them will ultimately end up being selected by the president. As far as the pressure placed on the chairman, over the history of the Federal Reserve, the things that Donald Trump are doing to pressure the Fed have been done before. That's part of the chairman's job. In our society, our economy, when things go wrong, the Fed is the best whipping boy for that. And it's just part of the Fed chairman's job that he's going to be pressured by the president and the politicians when things are not to their liking.
That's the need for the independence. Yeah.
Yes. Now, I think really that Donald Trump has, again, mission accomplished as far as pressuring the Fed. I think it would be a mistake, and I think he believes so too, at this point, to fire the Fed. He's already accomplished what he needs to accomplish by changing the narrative. Most people now believe that if Donald Trump truly wants to replace the chairman of the Fed, he can do it. Whether he manufactures something with this Fed building and overruns, whatever it is, the public and the markets believe that at this point he certainly could do it. That's all he needs. That's all he needs. He has created a shadow Fed right now. So what I think will probably happen, and you're already hearing some of it, is that the Fed was going to lower interest rates, I think, this year once or twice, regardless of what the president said. Now I think that's really been solidified. It would take something very serious, like a 50 basis points increase in the inflation data, or the growth rate of the economy went through the roof, something like that, for the Fed to sort of change course. I believe that he's already mission accomplished as far as what he needs the Fed to do, and they're going to do it, and you know, and so I think that he doesn't need to do anything more than he has. As far as the members of the committee, yes, we're reminded in the financial community that the Fed chair is only the Fed chair, and there's a committee, and that it's incumbent on the entire committee and not just one person to decide on interest rates and where they're going. But I do not underestimate in this administration and this populist period that the same pressure that has been applied to Chairman Powell can easily be applied to the members if necessary.
Okay, what's all this talk about no more capital gains allowances if Americans sell their houses?
Yeah, that's
heavy.
That's a
Very
balloon.
deep.
That's a balloon that's been floated by the administration. As I wrote to my readers, the way it stands now for Americans, you are not taxed. You are not taxed a capital gains tax on the first $250,000 of gains in your house. So if you bought your house for $250,000 and it was now $500,000, you sold it, you would pay no taxes on that gain. However, because of the run-up in real estate prices over the last, 5 years, many houses, many people, they have experienced real heavy capital gains. I think I read that the average price of a house in San Francisco, the city proper, is $1 million.
Average.
Yes.
Jeez.
So in that case, let's say, you're retiring or you have been retired and you're downsizing to a condo or whatever, and you bought your house 30, 40 years ago for $100,000 and it's now worth $1 million, then lifting the capital gains tax on houses would be a great boon to that couple. That's what I think is behind this. And the other issue is that, as we know, the problem now in the real estate market is that many people have very, very low interest rate bearing mortgages. I'm talking not 1%, but 2 or 3 or 4% mortgages, fixed 30-year mortgages. To get that same mortgage today would cost above 6.5%, 7%.
But that's 1960 interest rates in the 60s, 6 or 7%. That's
Yes.
still pretty good.
That's still pretty good, but that's a heck of a lot. It's double what you're paying, your
Yes.
existing mortgage is. So this problem has kept so many sellers off the market because the last thing they want to do in a real estate market where the prices of your homes to buy are already sky high. Now you're going to have to pay, in order to sell and to buy, you're going to have to pay not only the sky high price, but a double in interest rates. And so what's happened is that there's been a building up of sellers who don't dare sell because they don't want to incur those double costs, interest rates and higher prices. So if let's say you did dismiss capital gains tax on everyone and you only did it for 2 years, okay? Most of those people who've been waiting to sell, okay, would then be tempted to sell because they're not going to pay. The person in San Francisco that bought it for $100,000 is not going to have to pay any taxes on their $1 million sale. So what the idea would be is you would loosen up the willingness of buyers. And that's what's really holding back the real estate market, that the buyers don't dare sell. You give them an added incentive of no taxes on all capital gains, I think there would be a lot of buyers, longtime holders of homes that would take the leap and sell.
Oh, I have to just ask though, but how about the elderly who need to downsize? Where are they going to find a place to live? That's the other question
Yeah,
about. I
that's
mean, if you have $800,000 or
you
where
have
do you go?
well, again, if you have an extra $800,000, as we know, most condos or co-ops are already cheaper. Even though their prices have gone up, they're much cheaper than homes. So, so I that you now, let's say you sold your house, you have eight or $900,000 extra, or without taxes. You would then, I suspect, many people would then be willing to bite, because they could basically pay cash for their condo
Yeah.
with their savings that they have made on savings of not having to pay taxes on the capital gains. So, I mean, some would do it, some would not be. But I think the object of floating this balloon is to somehow shake up the real estate market, where buyers and sellers are on the sidelines. But we'll see. We'll see if they do it or not. I don't know. I think it would be a good idea. And by the way, you'd only have to do it for a year or two. In fact, if you did it for a year or two, the urgency of the buyer to sell would be higher. In other words, if somebody dangled in front of me no taxes on selling my house, but I only have 2 years to decide,
You're going to find another place to live.
Yeah.
Somehow.
yeah.
And for our final question today, August through September is usually not a great period for stocks. What's your thinking on the markets?
I'm seeing some speculation coming back into the markets. That is, for me, who looks at markets on a technical basis, fundamental, behavioral basis as well, the increase in speculative buying of things like meme stocks. Meme stocks are, let me see, like America, the movie company.
Netflix?
No, the one that went from.
Paramount?
Let me give you another example. Let me think of a meme stock. A stock that has no earnings or no sales. That suddenly, one of them is Kohl's, for example. In the last 2 or 3 weeks, Kohl's has just went up 40 or 50% on nothing. There's nothing changed. Okay, GameStop. That was 4 or 5 years ago. GameStop back in the news again, exploding, going higher. Tiny stocks, small stocks with nothing that are suddenly, speculative fever is going amok.
Are you saying backed by nothing?
Yes, I mean, they don't really have that many sales. If any, they're operating at a loss, all the rest. They're meme stocks that they just, the retail public just gets a hold of them, buys them, the prices of these stocks go through the roof, and then of course at some point they all collapse again. And I saw this during the COVID crisis, and I'm seeing it again now. That's usually a indication. I'm not saying this is going to happen tomorrow, but it's an indication that speculation is getting to a point where you've got to watch out. I'm seeing other signs of that. There is an expectation that a growing number of people on Wall Street expect some sort of pullback in the period of August or September. I don't, other than that speculation, I don't really see it yet, but I'm watching really closely, because I think that we've come very far in the markets. This week, if we get some good news out of China, I expect the markets will celebrate and go higher, and that's important. And then the Feds at the end of this week but I don't think that's going to push the market higher. So going into August, I would be cautious. That's the best I can say, cautious. I'm still holding, but as we go higher, I'm starting to peel out some of the more speculative positions that I have. So we'll see.
Thank you so much,
You're
Bill,
welcome.
especially for letting me interject my on-the-spot thoughts and question. This is a joy.
Well, I enjoy it too, and I look forward to talking again in August about what's happening in the markets in our next session. So thank you for tuning in.